The darling AMC reports earnings here in after hours, so let's talk about what to expect, the good and the bad that will be coming out of AMC earnings. Now, the numbers are not officially released as of right now. We will cover that here shortly on the channel, so stay tuned for that video. It might come out a little bit later. There's more thunderstorms, and it looks like the internet is going to go out, but we will cover that and kind of go over what to expect, because AMC doesn't always move the biggest right after earnings, but AMC tends to have very strong post earnings reactions, so it doesn't even necessarily matter what happens right after earnings come out, but it's the context behind all of this that really needs to be explained. So that's really what we're going to talk about later on today after earnings. But before earnings, what is happening with the stock? That's what we're going to get into right here and right now. So let's dive into all of this key information. And first things first, I want to start with the broad macro situation. A lot of people, including Morgan Stanley, have come out today and they're essentially saying the Fed is nowhere near done raising rates, that the economy will get worse, and essentially that we haven't seen the market bottom yet. Now, besides that, besides Morgan Stanley, besides Fed speakers coming out over the last week and saying this rally should not be happening, that we need tighter restrictive policies, right? Not looser policies with a market rally. Besides that, you're seeing the Bank of England coming out today, and this might sound like a little bit of rehashing from the last video, but I think it's very important to point out, because usually large governments, large countries by GDP, right, important global countries like England, does not come out and forecast a year-and-a-half long recession with inflation at 13.3%. It just doesn't happen. So let's go over this again for everyone that did not see the last video. It says Bank of England launches biggest interest rate hike in 27 years, predicts lengthy recession. The key points: the sixth consecutive increase takes borrowing costs to 1.75% and marks the first half-point hike since the bank was made independent from the British government in 1997. The bank now expects headline inflation to peak at 13.3% in October and to remain at elevated levels throughout much of 2023 before falling to its 2% target in 2025. The MPC now predicts that the UK will enter recession from the fourth quarter of 2022 and that the recession will last 5 quarters. That is a year and 3 months that technically England or the UK, whatever you want to call them, would be in a recession. Now, the biggest thing I really find from all of this is that they expect inflation to peak at 13.3% in October. We have been pretty parallel with what Europe has been doing as far as inflation. There's not too much of a difference between England inflation and our inflation. I believe that England's inflation is a little bit less than us actually right now. So to be coming out and predicting more rises over the next couple of CPI readings to peak out at 13.3%, well, that is something the markets over here at least are not expecting. The markets are firmly expecting inflation to go down and the Fed to not raise rates as aggressively. So let's imagine for a second if we do get inflation at 13.3% and the next inflation reading coming out next Wednesday, well, the stock market's going down, and it's going down big at that point, right? Because that's not a good situation. The Fed will have to keep raising rates into a slowing economy when inflation is eating away at your buying power. And all of this is also being reflected in the yield curve inversion. It is inverted 36 basis points. This means that people are ultra fearful about the economy, that we will indeed go through a recession. The time frame on this is a little bit unknown. Usually 3 to 6 months after the yield curve inverts, that's when you can expect to see a recession. And the yield curve obviously did invert back here on April 1st. That was actually my birthday. And you can make the argument that we're in a recession right now. We're in a technical recession. So 3 to 6 months later, that actually did pan out. But if you want to take it for what it is, the day that we really started to invert just recently, that was back here around July 5th. So we are about a month into yield curve inversion. So it would be 2 to 4 months still before we would be in a real recession, before you see unemployment rates start to go up, before you start to see, home sales dramatically drop off, things of that nature that are more indicative of actual recessions. Now, as far as AMC stock and what's going on with this company today, AMC is up about 5%. Heading into earnings, up 5.22%, currently trading at $19.17 per share, and you have seen a lot of option activity for the day. Like I said, heading into earnings, it looks like a lot of people are starting to bet on AMC, and over the last week, you have seen 95 orders totaling $5.85 million, positive order value of 72%. Today alone, you are seeing 35 orders totaling $2.37 million, positive order value of 55%. And a lot of these orders are extremely bullish, like this August 26th, $25 call for $15,000, $18 calls, 1850s, $20, $50 calls, $35 calls, $20 calls. All of these, most of these for just next week's expiration on AMC. A lot of this option activity is for August 19th and August 12th. So there's a lot of directionally bullish option activity this week and over the next couple of weeks. You guys can see the open interest on the call side for August 12th alone is 77.39% of all options are calls. 22.61% of the open interest is put. So there's a lot of people betting that AMC stock will go much higher. Now, like I said, if earnings are out right now and you're seeing AMC drop or pop here in after hours, it does not matter. You need the context here. You need to know, what's going on with the business, what's going on with the whole sentiment of this of the stock, because there's a narrative that AMC is going to pounce on the short sellers. Now, if they give us something that would help to squeeze out the shorts, that's going to be positive. That might be reflected in after hours. That might not be. It looks like the markets are already expecting good earnings. So if we don't get any new information about the popcorn business, crypto business, new stakes in companies or dividends or anything else like that, and all we get is good earnings, then I would look for that regular sell-off after AMC earnings, and then that rally 2 to 4 weeks after that, because Adam Aron, after all, said that a pounce would not come before Q2 earnings. So a lot of people are taking that for, Q2 earnings are going to have something in them directly that will make AMC, rally, but it doesn't necessarily have to be that. It could be a couple days after earnings. It could be a week or 2 weeks after earnings. He just said after Q2 earnings. So there is that information, and hopefully, you guys can use that in the context of what is happening here in after hours to hopefully make some money from that. Now, the cost bar max sitting at 16.4%, cost bar average at 9.28%, and cost bar minimum at 7.94%. 18.7% short interest of free float. Free float out on loan 25.57%, and the days cover sitting at 3.14, whereas the utilization is at 100%. So all of this is looking very, very bullish. And like I said, for today, you didn't have too much economic data. You did have the trade balance, which that really didn't do anything for the markets. The markets kind of brushed that off. The initial jobless claims did tick up just a little bit here today, but the markets obviously didn't care about that all too much. For tomorrow, you do have the unemployment rate for July and non-farm payrolls for July as well as Fed Barkin that speaks at 8 a.m. and that's probably going to be the most important thing, is that those payroll numbers as well as what Fed Barkin has to say. Again, Fed Barkin at 8 a.m. The payroll data, the non-farm payrolls, and the unemployment rate coming out at 8:30 in the morning, as well as participation rate, government payrolls, manufacturing payrolls, average hourly earnings, just everything you need to know about the worker and how much they are working, how much they are making. All of that comes out tomorrow. Now, as far as what the markets are pricing in for the next Fed meeting, you do have a 19% chance of a 75 basis point rate hike. This is partly why the markets are rallying, because last meeting we got a 75 basis point rate hike, and if the Fed slows down at this point, well, the markets are taking that as a bullish thing, right? If the Fed did 50 basis points and the markets start to say, how long is it before they do 25, or they even start to cut rates? The higher this 75 basis point probability goes, the worse off the markets are probably going to be, especially heading into the meeting September 21st. 81% of investors do still expect a 50 basis point rate hike. Now, in terms of the actual technicals for AMC stock, let's go ahead and pull up good old AMC. Oh, wrong AMC. We're currently at $19.06 per share, up about 4.64%. It's very volatile, as you guys can see, a pretty big range from $18.30 on the low end all the way up to $19.75 at the high end. You've pretty much almost moved $2 round trip today, just back and forth, back and forth. We are in a picture perfect technical breakout, and we have just broken above this level that we were at back here, and I'm going to do a horizontal line, which was the peak of this last rally, which was at about $18.37 per share. And what happened today? Well, that's roughly the low that we hit, right? It was about $18.30 per share, and you've come back up. So I think that's a very good sign. If AMC were to fall under this level heading into earnings, well, that's probably a pretty bearish sign. So the fact that we are holding up support even intraday today heading into earnings leads me to believe you could see a pretty big event to the upside, especially if we do break out above the 200-day moving average. That sits $21.09 per share. The MACD is extremely bullish today, and the RSI is right on the verge of going overbought, whereas the volume for the day is quite low. Pretty normal what we're used to seeing. You know, 43 million shares traded hands August 2nd. August 3rd, you've seen 42 million shares trading hands, and so far for the day, you've seen about 38, almost 39 million shares trade hands for the day of earnings, which is today of August 4th. So there's definitely room for more volume to come in. There's definitely room for more momentum to come in. The meme traders, the momentum traders are definitely out there. They're preoccupied with a couple other stocks. AMC, I think this is more of a technical rally. I think it's algorithms, and I think it is hedge funds based off of the positioning that we are seeing. So stay tuned for the next video going over AMC's earnings, breaking down everything you guys need to know. Hit that like button and subscribe to this channel. Until then, also, if you guys want to come trade with me live in real time, link down below in the description. We do have some trades on AMC stock, so come be a part of that if you have not already. Thank you guys for watching, and I will see you in the next one.